All right, good morning and welcome back to the UK Times educational or discussion session. Uh, it is 2:30 a.m. Eastern now, and as usual, a warm welcome to all the new subscribing members. And uh, let's get started on two chart reviews as usual. We we begin with the Bitcoin review for now, and then we'll come back on the Euro USD. So let's get started. And for those who are tuning in for the first time, I'd like to update that we're taking two free educational sessions, one during these times and the second one during the 8 a.m. Eastern, that is the New York market open. So you might want to make note of that, where we are bringing in case studies for at least two charts that we have trading interests on. So let's get started off, brothers and sisters, and I think Bitcoin is one of those interesting charts. I just wanted to make sure that what you're watching is the Bitcoin right now. Yes. Let's first understand the story of the Elliott waves, which has this guy has followed it to the core. In fact, we have not been able to capture the entire rally of 2017, but the last leg, a bit of the portion of the last leg we could capture, and finally the corrective drop has been done successfully. Prices are testing and a very critical, I should say, very critical support region right now, just around the 5,500 and 6,000 mark. Let's understand the basic pennant structure now. If you have been with me since November 21st, 2017, the day this channel was launched, and if you have followed through the educational recordings and the sessions that we did live, and they're all there, uh, recorded versions as well. This is the basic where we started from. And believe it or not, if you can just count 1 2 3 4 5, and also on the other side, if you can count ABC, that's what it is all about precisely. Of course, there are a few very strict guidelines that we need to follow, and a bit variance as well. So 1 2 3 4 and 5, that's an impulse wave. It's called as an impulse. And on the other side, labeled as A, B and C, known as the corrective wave. Alright, so we are not very sure whether we have done or we are done with the corrective wave structure ABC, or is it going to be just the A wave? That should be a 5, 3 and then 5. We are still keeping the other option open. It could be a 3-3-5, or it could be a 5-3-5. Right. At least for now, we are seeing this as a 3-wave drop, which could be labeled as an ABC, But just in case if it drops 5 waves, then we are nowhere near wave C. We are just about completing the first wave, that is A. That would be the actual analogy or the implications. All right. Let's now figure out the waves that has been formed on the Bitcoin charts right now. Please remember we have only July 2017 onwards rally. I'm just changing a degree a bit because we have seen the rally actually from quite a few lower levels. Could be labeled as the third wave or wave 4 down there, and then the rally for fifth wave. It has actually formed a higher degree wave 1. So we're not plotting that. Maybe we can do a double brackets wave 1, right? Just changing the degree a bit, that's all. When you're appearing for an examination, you need to take care of all the nomenclature of plottings and things like this. But for the trading point of view, the most important thing, if you can just understand or identify the wave pattern and more or less, if we can find out where exactly we are standing within that pattern, that's it. We are we are we are good with that, right? So 5 up, and then A, or should I plot? We never know it's going to go 1 or 3 waves or 5 waves. So let's have an alternate view as well, wave A or 1, which we have always carried on with us. That is wave B or the second wave. There's a few some disturbance. I just wanted to make sure that we are, yes, we're on the same screen. Yesterday that screen went off a bit, and I thank one of our friends here, Sukhvinder Paji. He told that there's a problem uh, in viewing the video. Actually, it came on the 16th minute. So thank you, sir, again, so that I'll keep note of what's going on. We are very close to wave C now. It's either being done right now or just about the same region. I'm not taking it away from here. All right. Maybe we've got the if you want to break it up, it could be wave 1, wave 2, wave 3. On the daily chart it looks like wave 3 is still going on, and then there would be wave 4 and wave 5. So let's put a question mark here, right? And the other way around was the third wave here. But let's not complicate matters. Okay, let's put on the trend lines and Fibonacci ratios here. It looks to be quite interesting a scenario. Since last 2 days now, yesterday and also on Friday, we have been continuously vouching for be watchful kind of a trading approach. All right, and don't be too aggressive short at these levels. For those who have tuned in recently or just for the first time, I would like to remind you that uh, 17,000 levels were the first major short entry point. We did go short the sub 20,000 levels, but those points were not calculated. I didn't do that. But from 16,000, 17,000 levels, we've been counting pips, and it's now more than 7,000 now. Can you please pay some attention here? It is a very simple tool, most commonly used tool, and also very easily ignored, and that's a trend line. All right. Uh, if you're going to see a bounce from this region, that's a trend line support for about 6 months now, 6 to 7 months now. That is passing through the 17th of July 2017 lows. That would have a meaningful implication on this cryptocurrency. All right. So we've got a couple of other tools as well. Let's put them on the charts here. Another very basic but very effective tool would be the Fibonacci retracements. We are very close to a 786 Fibonacci support, which is coming in at the 5584 region now. There is no guarantee or certainty that the price is going to drop all the way towards the 786 mark, but if it does, you should be very watchful for some kind of a bullish reversal. I am not claiming or neither suggesting, or these are educational sessions. We're not at all pinpointing the trading part. That's altogether a different segment for us now. But the only humble suggestion that I can be talking about here is to be watchful. All right. Don't forget the other one as well, Fibonacci extension. And we have been pinpointing this level since the first leg drop during December 2017. I'm talking about those 4 candles. We've got the first boundary, we got the first boundary there, and since then, since the 22nd of December, potential drop could be all the way towards the 5500 mark. That's what we've been always talking about. It's a different story altogether, that it was not well received or believed earlier on. That's a part and parcel of a trader. Okay, let's do a channel now. Is that okay? Just need to make sure that we are doing a parallel. Actually, I think it's a parallel done properly now. So how many things or how many convergence levels are you able to find out right now, brothers and sisters? I'm just leaving this chart for a few seconds on the screen here for you to just make up your mind of how many convergence levels are coming. Just a few more seconds and then let's do it together. Believe it or not, these sessions are very powerful for all of us, including me. It does a lot of good to what we've been doing as a trader. All right, point number 1, the wave might be just ending. The corrective wave might be just ending. We might be just very close to the C wave termination point. That's point number 1. Point number 2, we are right at the 7-month-old trend line support. that needs to be respected at least, uh, and given a bit of time to react around this level. All right. So give it a few more hours, or maybe today and tomorrow, to see how it's reacting here. Point number three, Fibonacci 786 for the impulse, and the Fibonacci 61.8% extension for the corrective wave, very close. I mean, just about 300 to 400 points closer. So quite a bit of convergence level. Channel support number 4, past resistance becoming future support number 5, maybe a candlestick pattern could be number 6. Do you want another one? I think we have got another one as well. I don't know how powerful it would look like, but if we go back on the MACDs and the RSIs, I don't say it's a bullish divergence level, but let's not count it right now. I mean, 6 convergence levels are okay with us for now. Be watchful, brothers and sisters. This might be just the kind of levels where bulls may come back very strong. It is not a certainty, but it should be given that due respect. Maybe in the next 24 to 48 hours, things would be more clear. Right. Okay, let's move on to the Euro USD and spend a couple of minutes there. We would like to begin the story from the 4th wave, actually, around the 1.1550 mark, and fortunately the story continues as it was depicted and it will be discussed earlier on, with potential waves 1, 2 and 3 on your screens probably ready. We are looking for a potential A, B and C now. Now, if you want to take the analogy of a chart pattern which is very similar, or the Elliott wave pattern, the standard flat that we are expecting, it should be unfolding in that fashion. That's exactly what we have printed here as small a, B and C. Alright, if you want to know the subwaves or the subdivisions, it should ideally subdivide into 3, 3 and 5, out of which waves A and B seem to be almost ready. I think wave C, if it is going to be a standard flat, it's kind of wanting to unfold into 5 waves, or it should rather unfold into 5 waves. Now, as an alternate count, we always would want to keep an alternate, at least one probable alternate would be a running flat, and if that is it's going to produce a running flat, then wave C would just fall short a bit. That's it. Here we've got the first wave A, wave 2, that is wave B, and wave C might just fall short of dropping itself lower from the termination point of wave A. That is a probability. I'm not saying it's a certainty. No ways. Very few instances that we'll find out where that there's more certainty or more than 95%. I mean, normally it would be an 80-85%. And even if we can find out these ratios, that should be good for our trading. So it's going to be expected to turn out as a standard flat or a running flat, it's too early to decide or to confirm whether it's going to go as in a triangle. All right. So the only piece of advice is to sell or keeps looking for opportunities to sell on rallies. That's a safe trading strategy. Aggressively, if you're trying to fetch on the long side, then it should be a low risk. You should be taking your stop loss or risk very tight and be watchful. Take some pips out of the desk and come out and say thank you very much. This is if you're wanting to trade aggressively long. Otherwise, selling on rallies remain a very safe strategy. Resistance right now stays well above 25.37. Another tool which we might want to use is the channel line support. We want to connect waves 1 and 3, and then let's draw it parallel through wave 2. What do you say? It's kind of getting some support right at the 2300 handle right now. All right, so let's see in the next few hours or so how this guy is behaving. It could be either a running flat or a standard flat. Watch out for which kind of pattern is turning out to be. That could be the termination point of wave 4, either here or a bit lower there. Ideally, the previous price support is coming at 2200, so somewhere around those levels. The fourth wave should go and terminate before the fifth wave rally gets rolling. All right, so brothers and sisters, let's bring this session to a pause right now. I'll be back again after a few hours around 8 a.m. Eastern now for the New York Live, and we'll be touching upon the dollar index and gold chart setups when I'm back. Until then, once again, thank you for tuning into the live sessions, or if you're watching the recording mode. And as always, thank you so much for liking, spreading, and being subscribed here on this channel. May God bless you all till the next session. Bye bye.